Hey guys, Akil here, Forex trader, trading coach, and one of the co-founders over at tier1trading.com, and welcome back to another edition of the Weekend Trading Edge. If you guys are brand new, this is a weekly video that I provide for you guys both here on YouTube and on the Tier 1 platform, giving you a look around the market at what's on my radar for the week to come. No intro rant to start this week. We're going to hop right into the charts, but do me a favor before we do. Hit that like button and share this video. That's the biggest way you can support the show. Also, if you're new, feel free to leave me a comment throughout if you have any questions, or if you just want to say, hey, good job, Akil. Lastly, I don't do this nearly enough, but some shameless promotion. If you're interested in joining us on the Tier 1 trading platform, we still have that $1 14-day trial going on. I'll put a link in the description box below, or you can just go to www.tier1trading.com. All right, let's get after it. All right, so let's start off this week with taking a look at the pound dollar. And this is going to be a follow-up on a pair that we've been watching. Not in last week's video, I don't think we talked about it, but in the prior 2 weeks before that, right? I think about a month ago, we were looking for a trend continuation situation. And then a few weeks after that, we kind of changed our mind based on how price action was moving. And we were actually looking for a counter trend trading situation, or should I say a short situation. It's actually in line with the underlying trend, but counter trend to the smaller trend. Probably shouldn't have said that because it confused a lot of you. Let me start that over. We're looking for a bearish situation. And what we were looking for in this bearish situation was a head and shoulders pattern. You can see some of the notes that are still in my chart here. And this head and shoulders pattern had two different necklines, really depending on how you like to measure structure. So the head and shoulder looks like this. It's a classic reversal pattern. It's a multi-legged reversal pattern. So instead of just a V reversal, which would be, I guess, one leg, and instead of just say a double top, which would be two legs, it kind of goes through this motion where it goes up with a shorter extension, giving us the first clue of a weakened trend. We then get a deeper retracement back, giving us the second clue of a weakened trend. We then refuse to break the highs of our previous trend, obviously telling us a hold at previous structure resistance and a good chance that the trend is not going to continue. And then we finally get the validation by breaking the neckline. Now, as you can see, I have a few different lines on here. The blue line is what's called a slanted neckline. So for traders that use slanted levels of support and resistance, I guess I don't really know the official term for it, but trend lines, that would be it. For traders that use a horizontal support and resistance level like myself, you can see the two yellow lines that are down here. This was the level that I was looking to be broken. And there are two lines because there was an official line for head and shoulders, and then there was a sneaky level of structure right underneath there. Anyway, what's important, and if you guys are new on YouTube, I apologize. This is jargon that those who are with me on the platform understand because we've been reviewing this for, the same way for weeks on weeks on weeks. If you're new, I don't mean to confuse you, but again, this is a video that I try to blend for both our platform members and for traders watching on YouTube. So I always kind of try to keep that balance between keeping things as simple as possible, but also getting the points across that I want to get across for those on the platform. But what's important here is that we have a break and close, for me at least, we have a break and close below the horizontal level of support and resistance that I was looking at. For those who took the slanted neckline, obviously this happened well before, right about here. We now have this break and close below right here, giving us an official head and shoulders pattern and giving us or allowing us now to make the prediction that price is likely to continue lower. So when I go down to my lower time frame, you're going to see that I have a bearish bias and only a bearish bias on this pair until we get to the point where I expect the extension to end. Now, if we go down to the 240 and we zoom in a little bit, I'm actually going to delete some of these lines here to make life a little bit easier. You're going to see that we have two green boxes here, right? These green boxes are our VS1 levels. This is a support and resistance indicator that we give away over on the platform. Basically, it allows my eyes to see or to say, hey, Akil, this is a higher time frame level of support or a higher time frame level of resistance that you should care about. It's not necessary to trade. It does help with structure recognition. It does help save time in bouncing from one time frame to the other, and sometimes identifying levels of structure that you may have forgotten about. But what I'm looking for here, now that we have that lower low, lower close, right, is a retest of this level. So I'm going to look for a pullback to this zone right here. We can stretch these boxes out, and I'm gonna look for a shorting opportunity. And my projection is that, give me a second to zoom out some. Whoop, there we go. You can see this was kind of the main level we needed to get broken. This was the sneaky level right here that we said pay attention to. Now that we've broken that, I would expect a move down to about $1.20. Technically a little bit lower than that, but we'll keep things simple and shoot for the even handle at about $1.20. So you can see if we were to continue down right now, and this would be an opportunity for day traders, so we'll certainly look at this in the live room on the lower time frames. There is opportunity for shorts for basically about 100 pips. We're at 121 even. We're looking for 120, about 100 pips of potential profit. So you day traders, keep an eye on this on the Sunday open or the Monday open, depending on, or your Monday trading day, I should say, depending on where you're at in the world and when your day trading day begins. But if we push back, then that just opens up more opportunity, because this prediction of where we can go to 120 stays the same. If we pull back to 120, 150s, that just opens 50 more pips of opportunity. If we pull back to 122 even, this opens up 100 extra pips of opportunity. So regardless, I'm looking for shorts here on the pound dollar for the week ahead. I think it's a good opportunity from both a day trading and a swing trading perspective. And of course, if you're a counter trend trader, if you're someone that's looking, there goes that word again, if you're someone that's looking to get long, right, it's the same analysis. Just instead of looking to sell it until that 120 level, if price action hits that 120 level, then that's when you're going to start looking for your buying opportunities. You probably want to do a little bit more analysis, because that's not the actual level of structure. That's kind of the safety zone. So that's a level I'm comfortable taking targets off for shorts. If I'm looking to buy, I'd look for a little bit lower, but we can do that analysis another time. So pair number two we're going to look at is going to be the Euro Yen. And this was a pair that we looked at in last week's video. This was a trade that I involved myself in. This was a trade that was a very good lesson for our traders on the platform, not only in being patient with your reason for entry, in waiting for the double top, but a very good level in proper stop placement. Because I'll tell you what, if we go down to the 240 chart, the 4-hour chart where this trade was executed on, you could see that our double top was invalidated. All right, we had our official double top right here. We then invalidated it with the higher high, higher close. We pushed up a little, scaring some traders away, but because we had stops in the right location, we were not harmed. And again, it gave a good lesson on not only proper stop placement, but also trading psychology, because that could be very difficult to deal with when you see a price action going in the opposite direction. Is one, a hard thing in its own right, but two, to see it put in that type of invalidation of the level that you looked at, it could be very hard to stick with that trade. But I always say this, right? Patience pays. So for those who stick to the rules, for those who are patient in their execution, usually the market pays you dividends, while those who rush and make mistakes, well, we all know how that ends. But a few things that we're looking for here outside of this trade, right? Bigger picture, we have a few potential advanced patterns forming, and I actually don't know what these are. I was eyeballing them. I haven't drawn in my fibs yet, but I thought this was a perfect example to kind of show off the power of our pattern recognition tool here, right? Because I know this, right? This is going to be our X to A. So this is going to be the starting leg of our pattern, our swing high to swing low. We call this an impulse leg. There should be no brainer about if this is an impulse leg or not. It's a clear break of structure, a clear impulsive move. 100 out of 100 traders should see this, right? We also have a secondary leg that retraces back. This is going to be our A to B. Now, what we want to do with our A to B is we want to measure our Fibonacci retracement. We want to see what Fibonacci retracement level does that come to. If we come to a 50%, it means one thing. If it comes to a 382, it means another thing. If it comes to a 618, it means another thing. If it comes to a 786, it means another thing. This is the cool thing about having rules, and this is why so many newer traders flock to patterns, not because they're super great or anything like that, not because they're the best way to trade, but it's very easy to stay structured. It eliminates a lot of your ability to think. And as newer traders, thinking is usually a bad thing because we overthink or underthink or emotionally think, and that's what gets us into trouble. These are, for the most part, black and white, aside from obviously needing the ability to read a price chart, which is necessary in whatever strategy you would follow. But what gets interesting is this, right? If we take our next Fibonacci retracement, we know we have an X to A, A to B. We now want to measure out our B to C. In order for this to be a Gartley pattern, we need a very specific Fibonacci requirement, right? We need that 618 to be hit. And depending on how you draw your fibs, it may or may not be hit. Now, it looks like on my chart, we hit no matter what, but we know that different charts are different. Sometimes data is going to be different depending on where you go to. So it's very important that you have this level precise. Something I like doing to really just save me time instead of kind of eyeballing this and making sure I'm right on the lows here and making sure I'm right on the highs here is I like using our pattern recognition tool. I like drawing it in manually. There is a mode where it will draw it out for you, but I'm kind of old school. I like doing the work myself. I don't know why that is. Probably some deep psychological reason down low, but I like doing the work myself. So I like drawing it out, X to A, A to B, and I can go down and it's going to lock into this candlestick and it's going to show me we are at a 62.8 Fibonacci retracement. My minimum requirement is a 61.8. So boom, we've done it. This is going to be a legit C leg for me, and it saves me the trouble of kind of locating each candle and clicking on it like this and figuring out the highs and the lows, and time saving is great in my line of work. So we know that this is going to be a legit C leg, which means I can project a D leg. And if we were to return to this level up here, 117.50s, then we are going to have a bearish Gartley pattern, a deeper bearish Gartley pattern because of how deep my B leg is. And you can see the risk reward is going to be pretty nice on here. I'll give it to you in a little bit. Looking at about a 2-to-1 risk reward, about 60 pips of risk, almost 120 pips of potential target to target one. Not bad. That's the type of trade I want to be in. A 2-to-1 risk reward with a win percentage that is on my side. That's a good formula to making money in the market if you can do it and not sabotage yourself. Something else this could be as well, and we need to retrace a little bit for this first. I don't even know if I want to draw this on. Yeah, we haven't hit it yet. I was going to say something else we can do, and we can revisit this during the week, is we could have a bullish Gartley as well. So X to A, A to B. You can see we have not hit that 618, so that needs to be hit first in order for us to have a legit C leg. But if we do, we're going to have a decompletion right down here. So that could be another bullish reason. Again, I'm not too concerned with any of these right now because I'm already short. So I'm hoping that this little retest of our structure cluster right here holds and we can continue on our way down. But certainly a few opportunities on the radar for those who aren't involved in this trade and for those who are pattern traders, especially on the higher time frames here. All right, next we're going to go to the pound yen, the beast. This was another pair that we spoke about last week. We broke down this chart, so I'm not going to do it from the top down again, because if you've been following these videos each and every week, and if you've been following us in the live room each and every day, whether live or on the recorded sessions, you should know exactly what was on our radar and why we were making the prediction that we did. But if you remember, to go along with that prediction, we had an advanced pattern formation. We had a bearish pattern. That pattern came down and we did continue, and now we have put in multiple lower low, lower closes. So you can see we have a pattern of breaking structure. VS1 level broken, VS1 level broken, VS1 level broken. And each time it breaks, the market does the same thing, right? Before pushing down, right? This is the basics of how price action moves. And if you can understand these concepts, it puts you in a very good position, right? We extend, we break structure, we retrace. Look left, structure leaves clues. Again, there's a little pattern in here as well. This was the bat pattern from last week, which rolled over spectacularly. Last week was an amazing. I'll pause for a little bit. I got this question the other day. It was hilarious on Facebook, and somebody was asking me, "Hey, Keel, how's trading been during these COVID times?" And I was like, "Amazing." It was a quick answer, right? It must have been on Facebook or on my page managing something. Amazing. It was like, is that sarcasm or actually amazing? I'm like, no. No joking. Trading has been amazing. Last week was amazing. The week before that was amazing. Trading has been good. And the reason for that is this, right? As traders, we're a little bit different than investors, right? Investors, you're kind of taking a personal long-term bias in something, right? That's why you see most investors are long. It's kind of frowned upon to short the market as an investor, at least not as much as back in the day, but still, you're most likely investing in something looking for gains, looking for appreciation. Trading is different. Trading is more like mercenaries, right? We don't really care if the market's getting long. We don't really care if the market's going short. We just want to be involved in that direction. Forex trading is even more mercenary-like because there is no long or short, right? If I am long the pound dollar, it means or the pound yen, I'm buying the pound, I'm selling the yen. If I'm short the pound yen, I am buying the yen, I'm selling the pound. So it's never really buying or selling. It's just the relationship between the two. But the point is, when you have global economies in kind of the state that they are in, the volatility picks up in the market. And, a lot of the markets are moving off of emotional decisions, right? People moving money around and whatnot. And it's causing directional movement. And that's all we need as traders, right? All we need is movement. The worst thing that we can have as traders is for the markets to be agreed upon. Right? Stagnant movement where it's going sideways, right? That's typically what you get in the summers, and that's why we say summers are slow, right? Because there's nothing we can do if the market's going sideways. But when the market's moving, whether it's up or down, it opens up opportunities to exploit our edge in the market. And if we're doing our job as traders while consistently exploiting that edge, that's going to consistently bring us profit. And we've been able to do that very, 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 very well since March or so. So it's been a good period. And that continues here with the pound yen. Again, going kind of back into the topic I did before we got into the rant, right? Next level of structure, right? We extended past it. We invalidated it. What did we do? We retraced, right? Currently, we just put in a lower low, lower close. We had a nice double bottom right here. Broken close below that double bottom. Broken close below this wick we were paying attention to on the higher time frame. So what do you think we should expect the market to do now? Retrace, right? Same thing we looked at with the euro yen. Look for a retracement, and again, I would look for a move back down to about 129 evens. I can't really draw a Fibonacci extension on here yet because I don't know where that retracement's going to come, so I can really add some confluence to my analysis later in the game. But let's say we were to retrace right here, that's going to come in right at a 127 as well. So if you can take anything, and this is why we always, whenever we do our workshops, I don't know when the next one is, I think August perhaps. Whenever we do our workshops, we always start with the same concepts, how to read a price chart, because it is simple. The concepts is simple, right, of how price moves. Now, identifying it, that takes practice. That is a skill. You're going to have to invest time in the charts and practice until you get it right. But if you can just understand the basic concepts and invest some time in learning that instead of just looking for trade reason, it's going to start giving you an edge in the market. You're going to see things differently. And when you work that into a process, you're going to see things even better. When you take that process and add a trading strategy, you're going to see things even better. And when you put everything together, when you're finally at the point you need to be as a trader, you're acting really mechanically, right? You're looking for the same things every day. You're looking for the same moves every day. You're taking the same moves every day or every opportunity. And it just gives you this amazing tunnel vision as a trader, which can simplify the process and have you really running on autopilot, right? That's that unconscious competence stage that we all kind of, which is all of our goal to get to, where you're just, you know what you know, and you're Neo in the Matrix, just kind of moving slowly, looking the other way and deflecting bullets and whatnot. It's awesome. It's awesome. So another opportunity here on pound yen. Again, looking for a pullback trade, looking for a potential extension down to 129 as 129 even. All right, heading back to the pattern train, let's take a look at the dollar yen here. Let's delete kind of the funny stuff I have in my chart. Let's look for an advanced pattern formation. Again, there's going to be two of them setting up on here. There's going to be a bigger one if we take our X leg down here, starting at our VS1 level. We draw that swing low, the swing high, VS1 to VS1, looking like this, X to A. There's first pullback to be our A to B. This time, instead of a 618, we're coming to a 50%, which means I'm going to alert for a bat pattern and not a Gartley. If we were to come down here to our 886, because I know that's where our bat pattern's complete, we are going to have a potential bullish bat pattern. I guess if we made it to the 886, we would have a valid bullish bat pattern, with our kill zone being from that 886 all the way back down to our X leg. Now, there's another one as well, and you guys have probably seen it already. But if we take a look at kind of the inside move here, if we do something like this, if our A leg from the bigger pattern becomes our X, and we measure it out like this, swing high to swing low, our X to A, our retracement right here, B to C, excuse me, A to B, B to C being this retracement. If we push up to a D completion, we're going to have another Gartley pattern right here. This is going to be a bearish pattern. Risk reward is going to be a little bit iffy on this one. I can tell you this. You may want to go down to your hourly chart. I haven't looked at it on the hourly, but you're most likely going to see the same pattern. And if you're using an ATR based stop, you're going to get a smaller stop loss. So you may want to look for that if your risk reward is off. If not, you just have to make the necessary adjustments. So you can see right now my risk reward is less than a 1-to-1. What I would need to do is I would need to enter at a higher level because I am not allowed to have a risk reward under a 1-to-1 aside from on the cipher pattern. And what's important to pay attention to there is what did I adjust to make it work, right? This is different from forcing the trade, right? I don't want to move targets down, right? Because targets are at a very specific location for a very specific reason. I don't want to move stops around because stops are at a very specific location for a very specific reason. So the only thing that I can move is going to be my entry. Unfortunately, when we have pattern formations, we have this zone. So as long as price action stays within this zone, it's still valid. So that gives me the opportunity to move my my entry a little bit up. If price hits it, I'll be filled the pattern that I want to be filled on. If price gets to the D completion, bumps and runs, right, hits it, tickles it, touches it, and then goes the other direction, and well, it sucks, but it wasn't a trade that I was supposed to be in the first place, so I can't really get upset about it. I can be upset about it, don't get me wrong. It always stinks to leave money on the table, but the process is more important, and I value following my plan over making profit. And that's something that a lot of traders don't do, right? A lot of traders, I've shared examples like this in the past where I've missed entries by like 2 pips or something like that. And I'm like, hey guys, ooh, good call on this, but just missed by 2 pips. Market ran off without me. Sucks. And everyone, Q, you should have entered 2 pips earlier. Oh, you should have done this. You should have known that it was going to reverse at that level. First of all, if you knew it was going to reverse at that level, would I have targets at 2 pips above it? Or entries? Probably not, right? But more importantly is that you got to think big picture. You got to think long term, right? Short term, instant gratification is, break my rules to benefit on this trade. But in the long term, if we view all of our trades and probabilities, right? In the long term, if I consistently break my rules, is the probability in my favor to be successful or sabotage my account and go broke? Probably the latter. Probably sabotage my account and go broke, right? That's why most people go broke in the first place, because they sabotage their own trading. If I follow my plan consistently, this plan that is testable, verifiable, and repeatable, this plan that I spent days and weeks and months back testing and tweaking to make sure it makes the right way, and I have 100% belief in it because I did all the work that says, Akil, if you trade this particular way consistently, you will be consistently profitable over time. If I stick to that, this one trade is a blip. It's going to happen. We've seen it in back testing, right? We all have those all shucks moments in back testing. But bigger picture, we're going to exploit our edge. The probabilities are going to be in our favor. So we have to think bigger picture about these things. We have to think, what is going to help me in the long run? Because guess what? No single trade matters, guys. If you are personally affected off of any single trade, if you're, I don't want to say happy or sad, you're allowed to be happy or sad. But if one single trade is like a life-changing moment, there's a problem. There is a massive problem there. You should be able to be excited. Yeah, that's awesome. It won, or that sucks. It lost, but it shouldn't sit deep with you at all. Again, if that's the case, I would stop trading right now and really reevaluate some of the things that you are doing, right? You got to think bigger picture. Got to think bigger picture. All right, let's move on to, what are we doing next? So the last pair we're going to take a look at today is going to be the dollar rand. And this is a similar situation to what we looked at in gold the other week, where we had consolidation and we're looking for a breakout. And you can see what we have in front of us is going to be a wedge pattern or a pennant pattern, all deciding on how you want to define it. They're essentially the same thing. One just adds a little bit more confirmation. But these simple pattern formations, we like to call them kind of consolidation patterns, because what the market is doing, it is contracting, it is consolidating. You can see that the range is getting smaller, right? We initially have a big range at the beginning, and then as we kind of bounce back and forth, the range gets tighter and tighter and tighter. It's very similar to imagine taking a small spring, maybe the ones that you get from your pen, squeezing it together between your thumb and your index finger. It gets tighter and tighter and tighter, and then eventually it expands. Now, these situations are typically 50-50 as far as which way the breakout goes in, but this is where we can use a little bit of added information to give us a clue on which way is more probable to break out. And that added information is going to start with what was the directional move beforehand. And this is what turns it basically from a wedge pattern to a pennant pattern and gives it a little bit more power. Because obviously in this situation, the move before it was directional. Typically, price is likely to follow the path of least resistance, meaning, the trend is your friend until it ends. It doesn't mean that trends last forever, especially in Forex, tends to consolidate a lot more than trend. But until we see sign otherwise, the probabilities are we are going to continue in the right direction. Now, or in the same direction. Something that gives me a little bit even more added boost, I would even say more important, is where we're at in relative to overall structure. And you can see if we go up to the weekly, here's our consolidation pattern. If we look left, our previous level of structure is right here. So this also comes after a higher high, higher close. It's a violation of our previous structure highs, our all-time highs, by the way. And then we consolidate. And again, just going back to that IPDE process that we always talk about, once I identify a violation of structure, my prediction is that price is going to continue in that same direction. Now, what makes this opportunity interesting, we talked about this, we had a nice little lesson in the live room on Thursday. So for you guys that are on the platform, whether you're a trial member or a premium member, if you go back to Thursday's live room recording, let me just make sure it was Thursday's. Let me bring it up real quick. Yep. Rand, there we go. The very last thing, you see a lesson on breakouts. I'll give you a brief version here, but one of the dilemmas that we had in this situation was, if you are a structure-based trader, so you guys know me, my philosophy is structure-based, right? Structure, look left, structure leaves clues. Structure goes on or goes into all of my decisions in the market. It goes into entries, it goes into stops, it goes into targets. So typically when I'm looking for targets, I'm looking for levels of structure lining up with whatever other confluence I have. However, because we're at all-time highs, there's no structure here. So what do we do? And this was something a lot of our live room members, they never had a situation like this because it's rare. But Akil, how do I handle this situation? And what we talked about is, this is why it's so important to know to have different tools in your toolkit, right? I think you should at least start off by mastering a single strategy, right? One strategy, one pair, one time frame, right? The simplest way you can go, or maybe I should change that now. One time frame set, so a higher time frame, a lower time frame, and maybe multiple pairs. All right, let's take back the whole concept, right? One strategy, right? The other stuff could be more than one. But master one strategy, and that's the main tool in your toolkit. But having the knowledge of not only other tools and how to use other tools can help you drastically. Not only can it help you drastically big picture in your ability to adapt to different market conditions, and I think that's key to maintaining consistent success in the market, is that ability to adapt. But in situations like this, you don't have to forego what could be a very good trading opportunity, because we need three things before we ever enter a trade, right? We need entries, stops, and targets, right? Entries are going to be rules-based. You can look at this and say, I'm going to enter at the bottom trend line. I'm going to enter at the breakout. I'll enter at the breakout and the retest, right? The same normal three ways that we talk about. Stops, right? We have structure to the downside, so we know exactly where a stop placement should go. Targets is going to be the issue. And if we can't check off all three of those boxes, we can't take the trade. And you'd hate to not take a good trading opportunity because you have everything lined up but your targets. So this is where the other skills that you learn can come in handy. And this is why it's important to learn them, even if you don't think you're going to use them. And I bring this up because we're dealing with a lot of new traders on the platform, a lot of new traders. I'm getting a lot of emails. And a constant message that I keep driving in is really, hey, take the courses 2 times, right? There's about 6-7 courses on the site. Take them 2 times a piece, right? The first time, go through it with just the idea of learning. The second time, relate it to your specific strategy that time through. And why it's important to go through the first time learning is because if you go through with only trying to relate it to what you think you want to do, or just looking for trading opportunities, you're going to give yourself a false confirmation bias, right? You're not really going to learn the material. You're only going to think about it in the sense where, how can I use it? It's the same thing with analysis, right? One of the reasons I like that IPDE process is because it forces me to do analysis, right? My identify and my predict stage is on the higher time frame. I cannot trade off that higher time frame. So there's no kind of temptation to look for trades. It's essentially analyze the market and the trades will come to you. Now think about that in comparison to this, and many of you guys have probably done this before, but think about this in comparison to someone that's looking for trades, right? Maybe you already have a confirmation bias, the news told you something, and now you come into it only looking for this, right? You're not really analyzing the market. You're only looking for reasons that already fit into what you want to do, right? That's kind of what gets traders in trouble, right? They can find a reason to do anything if you look hard enough, and you're not really going through the process the right way, and learning is the same way. And I say this from personal experience. This set me back about a year in my trading. This sets back some of the members of our site as well, where they go through a whole year or the whole a full round of courses, I should say, and then they come back and are like, Akil, I got to be honest with you, I didn't really learn anything. I kind of just went through it, and now I don't understand this, because I'll ask them a concept. Hey, remember in the foundation course too, we went over this? Yeah. So very important to learn those concepts, because you never know when they're going to come in handy. And again, the second time through the courses, that's when you can start relating them specifically to your strategy. So I bring that up because although we can't make a structure-based target call for this one, we could use other tools, right? Such as, hey, Fibonacci training, right? So if we take our Fibonacci extension, for example, we go from the swing low right here to the swing high up here, this big move, the full range of this move, and back down, we're going to get a Fibonacci extension level, right? A 127 right here at 2078. We're going to have a 1618 up here at 2065. If we take our intermediate move, right? So if we take a look at this move right here, our last swing before the consolidation, right? Fibonacci extension, swing low to swing high, and back down, right? You're going to see we have some confluence here as well, right? Now we have that 127 from before lining up with our 1618. So we have a nice level of Fibonacci confluence right around 2050s, a decent level that you can use to project your targets. And again, there's no structure in account, so we're kind of going to a secondary reason, which would be fibs. We also talked about this is a perfect trading opportunity to implement your active trade management, right? Because we don't have structure, because we have a way to predict where the market will go to next. We don't necessarily have a place to predict that the market's going to stop. So if you can implement an active trade management type of deal into this trading situation, you can keep a position or two on and just ride it up with the waves and manage that structure and see if you can get the most out of this move. So decent opportunity here on the dollar rand. So that's going to be it for this week, guys. Before you leave, do me a favor, hit that like button. Once again, subscribe if you're new, and make sure that notification bell is hit. And leave me a comment below. If you had any questions about anything, if you just want to comment and say, hey, good job, feel free to do it. I love reading it. I read through each and every one of these comments each and every week. They do wonders in giving me content for my Trading Coach podcast as well. One of the reasons I started that podcast is to give people that I don't work with on a regular basis a chance to, try to say this in the most humble way possible, a chance to sponge off my knowledge. So when you guys ask questions, many of them turn into podcast episodes. Those episodes go out to everyone. So traders that can't afford to be with our program, or maybe traders that just don't want to be, they can continue to get supported as well. Speaking of which, if you want to join our program, start off with the trial membership. It's $1. It's 14 days, right? So invest $1 in your education and becoming a better trader. The first thing that I advise you do when you get on the platform, introduce yourself to the chat. I think our courses are great. I think our live rooms and our trading edge videos and our software and our accountability session and our Q&A sessions are great, but the best resource you're going to have is access to other traders just like yourself, because those are people that are currently going through what you want to go through or have gone through what you're currently go through, and they're going to be a massive sponge for knowledge and an alternative perspective from your coaches. I know some people get shy asking coaches questions. When you hear it from your peers, it's a little bit different, and there have been some great relationships formed on that platform. So I recommend doing that and taking advantage of your 2 weeks by sponging as much as you can, and I guarantee it'll be worth your dollar. All right? So I hope you guys have a great weekend. Until next time, plan your trade, trade your plan, and yeah, stay safe.